everyone. In this video, we are going to go over a very large cash flow statement problem. The reason that I've selected this problem is because it encompasses pretty much the entire chapter on cash flow. Okay, so the problem that we're going to do is Hall Industries, and here's what they're giving you. They are giving you a balance sheet. They're giving you an income statement. And they're also giving you additional information way down the bottom, which we'll look at that later. Okay, so before we begin, we're going over the cash flow statement. Okay, so the cash flow statement is going to explain one account. The one account is cash. So anytime it touches cash, whether it increases or decreases, it will go on the cash flow statement. If it does not touch cash, it will either go on, it will not be on there ever at all, or it will be a non-cash investing and financing transaction, which eventually it could end up on there. But all you need to know is that if it touches cash, it will go on the cash flow. All right, so the first thing that we're going to do is we're going to use our balance sheet. All right, so the balance sheet, it's giving you the changes from 2016 to 2017. We only care about current assets and current liabilities at this point in time. So you're looking at this balance sheet, it's giving you property, plant, and equipment. No, not for the operating section. It's giving you liabilities. We care about current liabilities. We don't care about long-term for the operating activities section. It's giving us stockholders' equity, not for the operating activities section. So remember, cash flow is broken out into three sections: operating, investing, and financing. We will complete the indirect method. So we will start with net income, which I'll go back to in a minute. The first thing that I want to do is I want to figure out the changes in current assets and current liabilities. So to not bore you and keep you all awake, I've broken this out already for you. Okay, so here's what you do. You analyze the changes from 2016 to 2017 for accounts receivable. All right, and so it was 122, it's now 71. It went down 51,000. We're not putting together the cash flow statement yet. We're only trying to figure out what happened with that account. Did it go up or down? Okay? All right, now let's look at inventory. 2016, it was 213. 2017, it's 344. The change was a positive 121. Just take the difference between the two. Same thing for prepaid insurance. The change was positive. All right, now we do accounts payable, which it was 40, went up to 54. The change was a positive 14,000. Wages payable, it was 17,800. It went down to 16,100. The change is a negative. Interest payable, all right, you get the point. Okay, so analyze those 2 years. You're only looking at the change. All right, notice that I do have cash listed. However, cash will never be in your operating section. Cash will be way down the bottom, all right, where you'll have your net change in cash. But you can do your check before you begin, and this is when I have you do an entire cash flow. Here's your check. Your beginning cash was 291,000. Your ending cash was 477. The change is a positive 186,000. When you're done with your entire cash flow, it better equal 186,000, or you did something wrong. Okay? Now, what it will catch is if you stuck something in your cash flow that shouldn't have touched cash. It won't catch if you put something in the operating section that you should have put in the investing section. So make sure you understand what goes in each section. All right, now we're going to start putting it together. Here's where you have to know the rules. All right, so what are the rules? When you do the indirect method, all right, I'm going to use my blue marker now so you can really see this. All right, so when you do the indirect method, what do you always start with? Right, you always start with net income. Well, where are you going to get that? I'm going right to the income statement. Everybody see that? Here's my net income right there. All right, so I'm going to grab that number. I go over here and I put in net income 171,080. Okay. All right, now I am going to start with the next items. Here's what I look on my income statement. I look to see items that do not touch cash, but they're in my income statement. All right, so I'm looking for depreciation. I see it. So here's my first item, depreciation expense. I will always add that back. And what I'm doing is I'm taking it out of this number. It's already in this number. It should not be. So what am I going to do? I'm going to do the opposite of the normal effect. I'm going to add it back in. Next thing I'm going to look for is a gain or a loss on fixed assets or a gain or a loss on investment. The reason that I want to take it out of here is because it shouldn't be there. It should be in the investment section. Here's the problem. I'm working with the income statement. It's already in that number. So I need to take it out. I'm going to do the opposite of the way it would normally affect. So I go over here and I put gain on sale of PP&E. Okay, I'm going to add that back in, and that is $3,500. Don't forget that, or you'll come out wrong. Okay, now I'm going to work with my changes. I'm going to go over here. All right, you got to know the rules before we begin. Here's the rules. If current assets increase for the cash flow, it's not logical. So if they increase, I'm going to show it negative. If current assets decrease, again, it's not logical, I will show it positive. Don't fight the rules, okay? Current liabilities. If they increase, it will be logical. I'll show them positive. If they decrease, it will be logical. I'm going to show them negative. So it's only current assets. All right, so let's go over. So I go look, and I have got accounts receivable. All right, so I put accounts receivable. All right, and you'll have a drop-down window in the lab. All right, so whatever they're saying for accounts receivable, I don't have the answer in front of me, but it will be accounts receivable change. Okay, all right, and accounts receivable decreased. So I'm going to show that positive. It's not logical. All right, then I go to inventory. Inventory. I look, increased. I'm going to show that how, because it's not logical, correct, negative. Okay, then I go to prepaid insurance. This is why I take good notes and you work right from your notes. Prepaid insurance, it increased. It's not logical. I'm going to show that negative. Okay? All right, next I'm going to my liabilities. I'm going to start with accounts payable. Accounts payable, all right, 14,000. It increased. The rules are, it's logical. It's a current liability, so I'll show that positive. Next, I've got wages payable. And that decreased. It's logical. I'll show it negative. Current liabilities are logical. Then I've got interest payable. Ooh, I gotta be careful with how I'm writing. Gotta write small. All right, interest payable. That's 1,300. It's logical. Okay. Then I've got income tax payable. Work right from your notes. Income tax payable, 53,820. It's positive. Other, accrued, expense payable. Remember, if it ends in the word payable, it's a liability. Okay, 3,100, and that's logical. It's positive. All right, now. The lab is going to make you do a change between these, okay? So put in whatever that change is. I don't have it right now, all right? But you're going to take 171 with all these changes, all right, and either add or subtract it. But in this case, it's an add. So your net cash provided by operating activities is 213,300. Okay, that is your final answer. So take your time. You can very easily make a mistake on this. All right, make sure you add your additions and subtractions separately. Okay, so that's your total for operating activities. All right, now for this class, you will always find investing and financing in these letters down here. Okay, before we begin, investing and financing will make sense. Okay, so if you purchase equipment, cash will go down. If you sell equipment, cash will go up. If you borrow money for your company, cash will go up. If you pay off any loans, cash will go down. So this one will make sense. All right, so let's start with A. Here's what it says. Okay, remember, if it touches cash flow, that's the only time it will go on the cash account. Sold plant asset for $4,200. The original cost of the plant asset was $10,400, and it had a $9,700 accumulated depreciation associated with it. Guess what? I only need one of those numbers for the cash flow. I only care about the piece that touched cash. Well, how much cash did they get? They sold a plant asset for $4,200. That's the number, only number I want for the cash flow. All right, so I go over here and I put sold plant asset. Okay, 4,200. Next one, paid $4,500 on the bonds payable, issued $39,500 of new bonds payable. Okay. Anytime a bond's payable, that will be financing. They issued new bonds payable, financing. Okay, so paid on the bonds payable. Well, guess what? That's going to go in financing, but that would be negative. Paid on bond payable. And that is 4,500. Get in the habit, don't do this right away, you'll forget. Put that in parentheses because you paid for that, okay? Then it says issued new bond payable. That will be a positive 39,500. They issued a bond because they wanted cash. Okay, I go back to the letters. Declared and paid cash dividends of 33,100. That's a financing activity. Okay, so I go over here. Paid cash dividend. I put that in. That is 33,100. Get in the habit, put that in parentheses. Everybody listen, you will forget, so right away do that, okay? All right, then I go up to D. Purchase new equipment for 13,100 paid cash. Okay, equipment is in the investment section. You have to know which item goes in each section. Equipment, so I go back over here. Oh, purchase new, that was an investment. Purchased, still in the investment section. Purchase new investment. How much? 13,000. Put it in parentheses right away. Parentheses, okay? Then purchase new equipment. Okay, and that is 20,400. Put it in parentheses. Okay, now we're going to total. All right, here's your total, and then we're going to total here. So, and then we'll total here. All right. Okay, so 4,200 minus 13,000 minus 20,400 gives me 29,200. Okay, and that is a negative number, very important. Then I go to financing. I add the 3 areas of financing, and that ends up being a positive 1,900. Okay, let me move the eraser so you can see. All right, now I'm ready. I'm going to add this section minus this plus this. So the net increase or decrease in cash of all these 3 numbers is 186,000. Remember that number? Here it is. 186. That's my check. All right? Then I just put in the beginning cash. I get that right from the problem. The beginning cash is 291,000. There it is right there. And then I add these 2 together, and they better equal my ending cash, which is 477,000. Ran out of room, but you can see it's a long problem. Okay? All right, so that's the statement of cash flows. Like I said, I chose this monster problem because I only have to teach you one problem. All right? Get in the lab, get that done, and then you're good. And make sure you understand each section, because you know when test time comes, I'm going to change it up. So make sure you understand what goes in each section and what those rules are. Okay? All right. Have a good week, everybody.